Hello. It's good to be back with you. I'm Bohnsack, President and Head of Portfolio Strategy for Strategas, Baird's investment strategy arm. So let's jump right in where we left off last week. Chatter in the markets and among clients about asset bubbles, particularly in equities, has only intensified in recent days. And there may be good reason for investors to take down risk as expectations on the pace of economic recovery appear to be reset. These are the same reasons we recommend a balanced asset allocation focused on your long-term goals. More directly, how much concern is actually warranted? As we asked last week, are we in a bubble or just in the early stages of a cyclical recovery finding its way past a virus, which in all its form and effect remains our Scrooge? Well, as we move into the heart of the 4Q earnings season, we would make three observations that lead us to believe the latter, that we're at the precipice of a cyclical recovery backed by the steady improvement in activity, demand, investment, output, revenue, and yes, profits. First, consider this chart of our Strategas profit cycle indicator. It's a gauge of the health of corporate profits throughout the business cycle. And most importantly, both readings, one of the highest earnings growth sectors and the other of the lowest, is moving upward. And if history is our guide, a reversal at this point would likely require an exogenous shock. Certainly not out of the question, but also not likely. So if the direction is correct, let's take a look at this chart, measuring the breadth of the profit recovery. It seems a little less than half of the S&P 500 sub-industries, about 45%, grew profits over the last 12 months. And the consensus believes this number will jump to over 57 in the next 12. But as you can see, post-recession profit recoveries typically achieve A-level marks, not topping out until 90% or more of the index is growing profits. So we have a way to go, and that's a good thing. And let's tie these 2 points back to current events and remember that profits are profits, meaning we should be less distracted by message board headlines or from a fear of missing out. Your long-term financial well-being can be best achieved through good counsel and thoughtful planning. The fundamental underpinnings of stock prices are derived from the durability of corporate profits, which are improving, and the health of the credit markets, which remain stable. When most investors' attentions are focused on short-dated outcomes, as they appear to be today, bending to every price move, data release, or informational tidbit, it pays to step back and consider longer-dated trends. Remember to stay the course. The Baird team will be with you every step of the way. We look forward to catching up. And until then, stay sharp, stay focused. We'll see you again soon.